Hi, everyone. Welcome to the One Voice Public Policy monthly webinar. I'm Paul Nathanson with the Policy Resolution Group. I'm on my own today. Caitlin Sickles is on a trip. I am here, as always, with my colleague Omar Nashashibi from Inside Beltway. As you know, Inside Beltway is the advocacy and research firm for PMA and NTMA. And my group, the Policy Resolution Group at Bracewell, provides the public affairs and strategic communication support for NTMA and PMA under the banner. Both of us work under the banner of One Voice for Manufacturing. So before I turn it over to Omar, just for the December for some of the things we're going to cover, which is a lot here. What's going on with what to expect in the lame duck of the U.S. Congress. There's going to be a lot of regulatory activity going on with the end of the Biden administration and before the Trump administration takes over. And then obviously with one of the major campaign themes that President-elect Trump ran on, trade and tariffs. We are going to talk about things that are happening now and possibilities on what to expect regarding tariffs on steel and aluminum and other products.
Thanks, Paul. As you said, no shortage of topics even in November. And just when you think of there's not a whole lot going on in Washington, that's wrong. There's always something happening in this town. And that includes starting up on Capitol Hill, where I spent a couple of days last week. I've got a few more days up there next week as they get going through the lame duck. Quickly from Capitol Hill, we are in the final days of the 118th U.S. Congress. Obviously, we ran through the election results last month rather. We're now going through some of the internal elections for leadership on Capitol Hill. As you all probably heard, Senate Majority Leader Mitch McConnell is stepping down from leadership and was replaced by Senator John Thune, a Republican of South Dakota. He sits on the Senate Finance Committee, and that's how we've gotten to know that office. And with that senator we've donated to him from both PACs, and so have been active in that office. He was very much a leader on a couple of tax provisions during the Tax Cuts and Jobs Act. One of them specifically on the 199A for the pass-through businesses to lower your effective tax rate. He was one of the architects behind that as well. And that's from those areas, one of the things that we see as being positive in the tax discussion there. But as it goes for the end of the year here, we are wrapping it up, and some things are going to fall by the wayside. It does not look like Congress is going to pass a full-on farm bill, which they're supposed to do every 5 years, I believe. It's going to be an extension into next year before they take that up. They are going to get the Pentagon policy bill done. That's the National Defense Authorization Act. That language was supposed to be released last night. I haven't checked this morning. I didn't get an email on it, so I don't know that it was released last night. It might be floated this weekend, but I know the House is going to vote next week on the defense policy bill. So they're moving through that process as well. And increasingly on government spending, it does look like, at least so far, Speaker Johnson might get what he wants, which is a government extension under the FY24 spending numbers into March of next year. And that's half a year of FY25 that would just go by the wayside. They'd have to come back in retroactively. And that's tough, especially on the defense folks that are out there. So wait to be seen if Schumer will go along with that in the next week or so. But they've got to move, as in next week, even on the contours of a continuing resolution, to figure out the order of whether that goes first or the Pentagon policy bill does as well. We are already beginning the conversations on taxes. We've been having lobbying meetings in person and virtually with Hill staff and members of Congress, and also will continue to do so for the next 2 weeks. But now we're also starting to talk about the procedural aspects of the tax bill and how that will happen. There's a process called reconciliation in next month in January, where we'll put a few slides in here on what the reconciliation process actually is. But for what your purposes are, the Affordable Care Act, Obamacare, was passed under this process. The Tax Cuts and Jobs Act in 2017 under Trump was passed this way. Biden got through the American Rescue Plan Act and the Inflation Reduction Act, also through reconciliation, which only requires a simple majority, which means a single party. All Republicans on the tax bill, all Democrats on the Obamacare, and that's the process that we're looking at on the tax bill in 2025 for all of the different tax provisions that are expiring. The concern, though, is Senator Thune, who's now the leader for Senate Republicans. He wants to move a reconciliation bill that deals with the border and deals with trade, it deals with security and a few other issues first, and then come back and do taxes second. And that creates a significant amount of concern for in the House and also for those of us working on taxes, as it could mean less permanency on the taxes because you'll have less money after you just spent on the first reconciliation package. And that could mean more temporary provisions on taxes and delaying the overall tax bill into later next year, which makes it more complicated. So those are some of the behind the scenes that will continue to be worked out here over the holidays and into December and into early next year. The new Congress being sworn in on Friday, January 3rd, I think is a swearing in falls on a Friday this year for House and Senate members there. Lastly, from Capitol Hill, we did have a positive development. Normally, we don't like to put things that only pass one chamber, but we are hopefully going to get something done on this one. The Senate did pass the manufacturing advisory bill that's been led by Senator Peters of Michigan and several others. It's a very bipartisan bill that goes to create an advisory council within the Department of Commerce, specifically focused on manufacturing and also specifically to include small, medium-sized manufacturers and their trade associations. Legislation that we've sponsored or supported in the past, and positive to see some movement on this in the waning days of this Congress. But as always, the bulk of the presentation here is going to be on regulations. And we expect in the next several weeks, continuing regulatory activity from the Biden administration in their final days in office before they turn it over to Trump. Just some data that comes out, especially in the context of some of the OSHA activity that is upcoming here that we're going to talk about. Manufacturing illness and injuries under the reporting for OSHA, those have fallen by 10%. And you can see those trend lines continuing to fall there in the manufacturing standpoint. This is the blue line underneath it is the 2023 numbers. The red would be the 22. So you're seeing a drop off there as well, which is positive in the recordables, and it goes along with what we've been saying on the Hill as well. The big thing here is the OSHA heat rule. This is the one where OSHA is seeking to impose mandates on employers when the heat index reaches or exceeds 80 degrees Fahrenheit on indoor or outdoor, and then the high heat trigger is at 90. Both of those would mandate anything from a 15-minute rest break every 2 hours to a 60-degree water temperature being made available at workstations, not just a water fountain. And that's a rule that we obviously will be filing comments on. OSHA, we did ask them to delay it since comments were due on December 30th. They did agree, and OSHA is now delaying their comment deadline to January 14th. Those are just the comments. It doesn't mean they're eliminating it. Speculation for a minute on what could happen under Trump with this. Obviously, we'll probably put an update in February, assuming that they do take some action on this early on. This is still a proposed rule that the Biden administration put out. They will not finalize this prior to January 20th, which means it would be left up to a Trump administration to decide whether or not to move forward. At the same time, on this OSHA heat rule being proposed, we must factor in that many states are continuing to do their own action on heat while they wait on OSHA, and also some municipalities. And lastly, the National Emphasis Program that was initiated on April 8th of 2022 expires in April of 2025, which would leave the Trump administration to consider whether or not to even move forward with the NEP, let alone the rule here in place. So that's something we will be watching very closely. And even without a Trump in office, we've now seen a very, very active Texas court, Fifth Circuit down there, work on a number of areas related to the Department of Labor. And we just saw them block the Department of Labor's overtime rule. A quick background on this: President Trump increased the overtime exemption threshold from 23,000 up to the current threshold of 35,568. Those are for full-time, salaried, executive, administrative, professional, and clerical employees. If you are earning below 35,568, you are eligible for time and a half for you full-time salaried. The Biden administration put forward a final rule that increased that 35,568 to 43,838 that took effect July 1st of this year. They had a second increase scheduled to go to 58,600 or so, and that was going to happen on January 1. The Texas court blocked that and said the Department of Labor's final rule is completely stopped and is denied. However, as expected, the Department of Labor has filed an appeal over that judge's ruling, and the Attorney General's office, in conjunction with the General Counsel for the Labor Department, will continue to pursue that. But that is an indication of, even under Trump, where it may be. Where these court cases end up going is you currently have the lawyers, even the career officials, report to whomever's in office, in this case, Biden. What you will see is the lawyers for the government will drop their defense or no longer pursue an appeal, and therefore likely allow the court's ruling to stand unless it's appealed by another private entity or employee. So that's how you will likely see some of these court cases plan out with the change in administration on January 20th, which also means it will be a change in the posture of the attorneys that are representing the federal government in court in many of these cases. One big one for you small business owners, such as myself, that had to do this filing. The Corporate Transparency Act beneficial ownership requirement for you to file by January 1 is now on hold. Similar court in Texas also blocked the Corporate Transparency Act. For you businesses that have 20 or fewer employees and 5 million or less in revenue, Congress passed a law in 2020 that went into effect that says that you must provide to FinCEN, which is the Financial Crimes Enforcement Network, all of the information for every owner that is active in the shop or has some kind of controlling stake in making decisions. Your information that would have to be filed with the federal government includes the copy of a photo ID, the date of birth, home address, contact information, and full name for all of those individuals. And that would have to be filed for all businesses that were in operation prior to 2024, had to be filed by January 1. A court has now blocked that. And obviously, we do expect some kind of an appeal on this. On Capitol Hill, we've been working on legislation that would delay it by a year, as it's quite a significant burden, but also a true concern of privacy that you're adding this to the federal government when states already have this. When you incorporate, when you register, states already have much of this. It's for money laundering, which is part of the reason, not part, it is the main reason that they want all this information. But as of now, it is on hold as of the 3rd of December, just happened this week. Jumping over to NLRB for a couple of items. And this is where we would look to a little bit more of a complicated situation when Trump comes in. It's a little more difficult for him to take control of the NLRB, given that you've got to have some positions that are open there, and you've got a general counsel that's arguably more powerful than the board members themselves. On November 8th last month, the NLRB did issue a decision on unionization statements during a decision. This is different than the captive audience meetings. This goes to at what and how an employer can speak and what language that they can say. They must be carefully phrased on the basis of objective fact to convey an employer's belief as to demonstrably probable consequences that are beyond its control. Basically, they're saying if you're going to say that it'll be very difficult, it'll be tough, it'll be catastrophic to have a union in our shop, and here's why, you've got to be careful in how you actually say that in one of your meetings if you're having an organizing action at your shop. Similarly, on the captive audience, we've seen a number of states that have pressed forward to ban captive audience meetings, meaning when you are trying to educate your employees about the detrimental impacts of potentially organizing in your shops, they're coming, these states and now the NLRB are saying you cannot require employees under threat of discipline or discharge to attend those meetings where the employer expresses its views on unionization. The employer's ability to require attendance at such meetings demonstrates the employer's economic power over its employees and reasonably tends to inhibit them from acting freely in exercising their rights. That last red highlight is supposed to, in my mind, tell you that it's not just about the threat of discipline or discharge. It's by you even just telling them that they should be there is an implied threat in the interpretation of the Labor Department. They've used this exact language elsewhere in rulemaking to say that the employer, by sheer factor of having the control over the employee, has, by giving them a paycheck, means you have an undue influence and a persuasion over that individual. And that's something to factor in here as well. Staying with the Department of Labor for a couple more slides here, they are moving forward to phasing out the less than minimum wage payments for those that are disabled. I know at least one shop in One Voice that has employees that they do hire, and this is something that's been encouraged by the federal government, I think since the early 80s, where it encourages companies to hire individuals that have some level of disability so that they can be employed, but allows them in certain circumstances to pay below minimum wage or to pay a different rate than for others. And Department of Labor looks to be phasing out that those exemptions that are allowing those certificates for employers to pay some workers with disability less than the minimum wage. And that's something to follow if you might fall into that category, and working with some of those groups that are helping those individuals seek employment. This is a real big one for us in terms of the work that we did. And thank you to everyone for all the work that you put into this on the apprenticeship rule. Earlier this year, One Voice filed comments. I think we did it in April. I mean, we filed 3,000 words of comments opposing the Department of Labor's actions. The Federal Department of Labor was seeking to eliminate non-registered and only allow for registered apprenticeship programs that use a time-based approach, meaning they would no longer allow competency-based apprenticeship registered programs to be verified through the federal level and be part of that program. And that's a real challenge for our members, as it would have told an employee that regardless of your previous experience, your competency, you will be sitting for 2,000 hours. You will not be receiving wage increases as quickly as you otherwise could. And the Department of Labor recently posted during Thanksgiving that they are withdrawing the proposed rulemaking that would deal with the removal of competency-based, and that would maintain the status quo in light of going into the Trump administration. Keep in mind that this still maintains we do not have the industry recognized apprenticeship program. The IRAPs are still eliminated, and that still could be brought back by Trump administration. But this is definitely very positive. It's a good victory that allows flexibility for manufacturers to incentivize more individuals to come into apprenticeships, and that way they can earn more quickly as they advance through competency or a combination of competency plus time-based approaches as well. Now, jumping back to the courts and pivoting to environmental rules and regulations that are coming out here. And as always, feel free to type in any questions that you've got in your Zoom. You should have a box or under the tab that says more. The questions and answer box will pop up. Please feel free to type anything in. Happy to answer those as we go and towards the end as well. This is a bit arcane, but it's important from a rulemaking standpoint. The Council on Environmental Quality, they've got a beautiful row house right next to the White House. CEQ was ruled by a court that they are not a rulemaking body, that they are, in fact, as it says, an advisory panel. So the Council on Environmental Quality has been putting out rules and attempting to do so on NEPA, dealing with permitting and the steps that companies have to go under the National Environmental Protection Act. And what this now ruling says is no, CEQ through the White House, in fact, cannot issue rules and regulations. Those have to go through proper channels, such as the EPA. And that is significant, especially as the Biden administration races to finalize some of the regulatory priorities that are there. Paul, I know your shop works quite a bit on NEPA and some of those areas.
Yeah, it's going to be a very busy time in the courts regarding NEPA and given the Supreme Court ruling last year on all these issues. So a lot of environmental litigation is going to take place, particularly with the advent of the Trump administration. But we're also looking at some of the ongoing litigation that occurred under the Biden administration that may be withdrawn, given that the new EPA will not want to defend some of the litigation that's been going on over the last 4 years. So we'll keep you posted on that. It's a very interesting time. So
it is. Did you do? I think you did your webinar, or not yet, Paul, on environmental for the lawyers. I'm not sure if they did it yet.
I don't think so.
Okay, then if not, then we'll make sure that we've got a link to that. That is very helpful. It's a seminar. It runs a couple of hours. They do it out of their Texas office, and they have a pretty good conversation about the EPA and what's coming out of their energy department. And I think that'll be a fascinating discussion when they do have that shortly.
Yep.
All right, thank you. Sticking over again on the environmental side, TSCA, that's the Toxic Substance Control Act. And OIRA is the Office of Information Regulatory Affairs. You are fully getting the alphabet soup that is Washington on this one, folks. OIRA is part of OMB, which is the Office of Management and Budget at the White House. This means that they have completed their regulatory review, and the agency is going to publish the rule on trichloroethylene. TCE is a solvent, I believe, a degreaser used in metals that some of our members have been using for a number of years that we've been warning is being phased out. This would officially start that process to phase out its use in industrial areas as well. Similar on the PCE side, the percoethylene, that one also has a number of occupational and industrial uses that are there, and that's in the manufacturing industry, and that's something that we should also watch out if it's in any of your shops, probably in O&G if it is anywhere. But we do know for a fact that TCE, especially in automotive and aerospace, has been used, and now that EPA is moving to finalize those were just done 2 days ago, which means we should see them. What it means is when it clears OIRA, that basically means the White House has given the agency its blessing to move forward with the agency after their internal and legal review there. One thing for some folks, this might come up. Some people were the Fair Labor Standards Act under FILSA, where some employees do incur some tool and equipment expenses on behalf of an employer, and the employer does provide a reimbursement for those expenses. I just wanted to be careful. This is a good thing for you all in terms of the clarification and whether or not that incurred expense it should be calculated as part of the employee's regular rate of pay while including the regular amount. So they are saying that the excess reimbursement payment has to be included if there is excess, but they do put some clarifications in terms of what is considered pay. So there's probably a handful, actually probably more than a handful, where this might, so on the HR side, make sure that someone takes a look at the slide and see if this impacts them. This came out on November 8th, so also fairly recent there as well. And hopefully at some point we'll be able to not keep talking about the employee retention tax credit, but IRS has yet another update that is retrospective here with regards to businesses moving forward by December 31st on the employee retention credit, the deal with third-party payers. I will also give a sidebar and some commentary. I'm not sure that he makes it through. For my Missouri members, you'll recall Billy Long, the congressman from Missouri, that's no longer up here on the Hill. He's nominated to be the IRS commissioner. He's the auctioneer. We had him at a few of our One Voice events here in town. What's notable is he apparently has a company that has been promoting employee retention credits and has been bragging about how much he's been able to get companies back from the government. So we'll see. This is probably not out of the spotlight yet, especially when it comes to Democrats in his confirmation hearing. So follow that issue as well closely. Two other items before we'll switch over and talk about some of the trade and tariffs that are coming up, since this also just happened this week. Again, a lot of regulatory activity will be coming in the coming days and final weeks of the Biden folks. This deals with the investment tax credit, similar to the production tax credit. This is for investing in clean energy property from offshore wind, geothermal pumps, different other co-located energy storage and hydrogen as well. This is the up to 30% investment tax credit. The 30% has been around for decades. Just the Inflation Reduction Act expanded it in terms of some of the clarification is what this final rule does with regards to owner of offshore wind farms that can claim credit for power conditioning and transfer equipment and subsea cables that they own. And so this provides some added guidance and some certainty for those that are looking to do those investments and in and through 2033. This one we've brought up in the past, starting last year, actually last September, and then in December, motor equipment manufacturers, Ann Wilson, who going to her retirement next Wednesday, she took the lead on this with the Biden White House of trying to get additional funds for automotive suppliers, especially in the context of retooling for electric vehicles. This is part of this that's moving out here under the Department of Energy. They have a program that is the Domestic Automotive Manufacturing Conversion Grants that would help some facilities. This is part of the 71 million that was just announced last month ahead of Thanksgiving. They did for battery recycling, for smart manufacturing hubs, and then this for the retooling of vehicle manufacturing plants, 22 million going through the state of Michigan, 10 million through Indiana. Tennessee's getting 5.5, Kentucky 6, and Illinois just under 5 million that ultimately will get passed down and into businesses such as yourselves and go through that. Suggest you take a look at that link there. Jumping over to trade and tariffs, and we'll come through a few areas here. Paul's going to jump in. There's quite a bit of activity on steel. We'll bring this up as this was one of the more politically potent cases going on here in town related to from the aluminum extrusions. The U.S. International Trade Commission, part of the U.S. government, after the Commerce Department recommended duties be applied to aluminum extrusions, and this also included actual parts that were extruded and not just the aluminum that some of you all might use from 14 countries. the International Trade Commission came in against them because some of these duties were going to be 200+% on imported aluminum extrusions. The International Trade Commission came in and said, no, there will not be material injury by reason of the imports of the extrusions from China, Colombia, India, Malaysia, Mexico, Thailand, Turkey. So there's a lot on here that were shipped in. And so therefore there will not be imposed, after all, the duties that frankly most of Washington thought were going to be in place. I think the petitioners, they erred in this one. They were too broad in their scope, try to include all of these others. And I think that's possibly there. I don't know, Paul, if you deal with this one as well, but I think I'm not sure that this is over yet, but that was one of the bigger cases here in town that we all were dealing with.
Yeah, I mean, it's a rare occurrence when the ITC votes against injury. And I agree with you that they were a little bit too greedy on this one. And I know that there was a wide range of businesses that were very concerned about the outcome of this case. So I'm sure there will be some sort of refiling of or some. I know that they've appealed the decision, although I don't think it's going to be changed. But yeah, I think it was a miscalculation by the petitioners on this one.
I'd agree. And let's see what they do under Trump as well. And if he just takes some additional action beyond that. But again, when you talk tariffs, Trump's doing 10, 25, 50%. Biden's doing 50%, 100%. Trump's proposing more, but duties, anti-dumping and countervailing duties, there's cold rolled steel that comes in at 522%. That makes 25% look like Trump change. Speaking of
Mm.
which, on steel, on the melted and poured requirement, this came about over the summer. The steel industry went to the Biden folks and said, we're seeing transshipment of steel coming in through Mexico into the United States, and they wanted an expansion of the melted and poured requirements that were put into the new NAFTA, the USMCA. This is now up and running in the ACE system, the ACE that customs run when you have to declare a product that you're bringing in. Starting November 21, the reporting is now up and running on the melted and poured and the source of imported steel coming into the country. So if you are bringing in metal, steel from Mexico, please make sure your broker, whoever's bringing that in, is now doing the other designation. That's this down here at the bottom. Country of melt and pour applicability code for derivative steel that are products of Mexico only. You've got to put the code other, and that's where they start taking a look and tracking and seeing if it's in fact coming in from China or not as well. And that picks up where the CBP, Customs and Border Protection, is going to seize all aluminum products that are coming in from a Dominican company that's owned by China. So just note that if you do happen to have any aluminum that's coming in, again, aluminum extrusions, that's where it is. But Paul, I think that Trump is still keeping his intent on keeping steel at the top of the tariff, really top of his mind and top of ours as well.
Yeah, on Truth Social and retweeted on X, President-elect Trump restated his opposition to the Nippon U.S. Steel deal very clearly. And he said that he could save U.S. Steel instead by a combination of taxes and tax incentives and tariffs. That puts this deal in a tough spot, as you know. It's being reviewed right now, and the review was postponed. But really, Omar, I think the only chance for this deal to go through is under this current administration in the next 6 weeks, and it's not like the Biden administration was giving positive signals that they like this deal anyway. So after the president-elect's posting on social media, Nippon and U.S. Steel sent a letter to its union employees that was talking about talking about in response to the tweet and talking about all the positive things that would happen under such a deal. So the deal is really teetering, I think, Omar, and unless the Biden administration decides to give a kind of a finger to the Trump administration, I'm not sure that this deal is going through.
Yeah, we do M&A work in our shop, but not from a legal standpoint. I just don't see how, even if Biden were to let this go through and say the review is complete today, how you could move forward prior to January 20th without giving Trump the chance to step back in there. But I mean, steel prices, Paul, are still a problem though.
Yeah, my arrow's a little low, but the top blue line is U.S. steel prices versus the rest of the world. So you could see that as usual, there's quite a bit of a gap between U.S. and EU and Chinese steel prices. Also, the capacity utilization rate, which is about 73% right now for the domestic steel industry, which has gone down a little. As you might recall, the original plan or the original reasoning for the Trump tariffs, the Section 232 tariffs back in 2018, that the Commerce Department in their report said they wanted to get that number up to 80%. It was over 80% for a while, but it has now gone down to 73%. So, we continue to track this on a biweekly basis. And, the reality of what's going on in the steel industry and the rhetoric is sometimes wide apart, as we can see here, Omar.
Yeah, absolutely. We've got about 5 or 6 slides. We'll get ready to wrap up. We already have one question that's been posted in the box. Any others, please feel free to type them in there as we try to get you wrapped up here in the next 5 minutes or so. Semi-annually, the Department of Treasury is required to issue a report. We call it the Currency Manipulation Report. Nobody's really listed on there as formally as one, and that's not a surprise. They did add a couple of countries for the monitoring list, and we'll continue to see what they do in the next report there as well. The Commerce Department did several things with regards to finalizing some rules dealing with export controls. They did one on information technology and communications. That is not what's on your screen. That was a separate one that they put out just around the same time here earlier this week or last week now as well. And so Commerce has finalized this export control rule that deals with semiconductors and some of the dual use items. Increasingly, you need to watch. I showed you the Dominican Republic screen, but they did another tranche of putting, DHS did, of putting companies from China on the entities list of where you're not allowed to bring in or have any connections to goods that were manufactured or supported by services provided by those companies. So watch out for those. But, guess who's back, Paul? We're not, doesn't look like we're having Lighthizer back, but Peter Navarro is out of jail and coming back to the White House.
Yeah, Peter Navarro's tan, rested and ready. He's after having some R&R in prison for refusing to cooperate with Congress on the January 6th investigation. But the trade team is now coming into shape. All indications are really that the president-elect is going to lean on Howard Lutnick as Commerce Secretary, kind of like a Gina Raimondo in the Biden administration that really took a lead on trade issues. Interesting choice for U.S. Trade Representative. Jamieson Greer was Chief of Staff to Bob Lighthizer in the first Trump administration. It's an interesting Washington game, Omar, that's going on here about what's going on with Lighthizer. He's really the philosophical backbone and implementer of the Trump tariff policy. I don't think he wanted to come back as U.S. Trade Representative. I think he wanted another position, but so far he is not joining the administration. It doesn't look like there's any slots for him. Jamieson Greer is viewed as a very competent lawyer. He's at King and Spalding right now, more lower key, and I think you're going to see Howard Lutnick really take the lead, at least publicly. And then Peter Navarro has always been the whisperer to Trump on trade and manufacturing issues, and it looks like he's returning to that role.
Yeah, I think you're right. I think increasingly we see, I equate him to a Catherine Tai, the current U.S. Trade Representative. Somebody that, yes, is viewed a little bit more as staff, and therefore you're going to have more of the policy being run through the White House and the Commerce Department, and he'll be more the executor of those, similar to what Tai has done over there. A few things we just wanted to float out. We've shown some of these in the past, but we've got quite a bit of questions over the last few weeks since the election on Trump and tariffs and what they could and cannot do. Obviously, we had Trudeau from Canada go down to Mar-a-Lago last week. We had the phone call with Sheinbaum, might have been this week now, with Sheinbaum and Trump, the president of Mexico. So obviously, permanent normal trade relations status revocation, that is going to continue to receive increased attention. That would only take an act of Congress in order to do that. So just watch out for some of those areas. But on the day one actions, and we'll get more into this next month as we get closer to the Trumps coming in, but still there's a lot of discussion under what he could do under the 301 tariffs that are there. We do want to just mention quickly the IEPA. That gets the most interest. And can he or will he impose tariffs on, say, Canada and Mexico? He can impose tariffs for balance of payment deficits. So, for example, you go after South Korea and say that you're shipping more into the U.S. than we are to you, and therefore impose Section 122 tariffs of 15%. Europe's a little bit more complicated when it comes to tariffs because it is a whole block, and you can't sit there and say, I'm going to impose tariffs on Germany. You impose tariffs on the EU is how it's done. You can impose duties on individual countries, but the tariffs are typically done by the block, and that's a little bit different on there. But just quickly in 60 seconds or less here, in what you need to know on the IEPA, as this will receive the vast majority of attention from the people around Trump, and when we question what he can and cannot do. On the IEPA, this is the International Emergency Economic Powers Act. This has been around for several decades, going back into the 70s, and has been used quite excessively. You will see that we are still in a state of emergency for some items going back 44 years. Some of them can stay in effect, and then they can be eliminated. So if he were to use the IEPA, he could put in place and say, it is an emergency for immigration coming across the border, and therefore I am going to restrict certain commerce or restrict certain transactions, or then justify to impose certain tariffs. And you can see frozen assets, block property, denying entry into the United States. All of these are different areas that is granted and permitted by them under it once he declares a national emergency exists. And we've been around Trump Part 1 to know under Part 2 that he already believes an emergency exists on fentanyl, on immigration, on certain shipments of products. And so when you look at the realistic will he or won't he, how much of this is a threat of negotiation, there is a good amount of what he can do on the virtual day one meeting within the first 10 or 20 days as they come into office. And this is taken from a report from the Congressional Research Service. This is the official library, call it, for the research arm of the U.S. Congress, and it is nonpartisan. And that's why I wanted to just flag for you some of the different trade and tariff items that we might be expect here. And this is what they're talking about using on Canada and Mexico. As we wrap up here, as always, you can stay connected with us through the One Voice podcast. We're going to be recording one on Monday. We're going to have a special guest and go into a little bit more detail on some of the tariffs. For those of you that want to talk a little bit more on trade and get more information on that, please be sure to listen to that when it gets posted sometime mid next week as well. As always, you can continue to support our advocacy efforts here in Washington, both associations, especially into the holidays. We're getting ready for a very, very busy next year. Your donations are certainly helpful to keep this program going as it is. And some of the questions that we've gotten there in the box, feel free. We've got two. Happy to answer those now. Type in any others that you've got as we wrap up. First question on taxes. Will the Senate move on the R&D tax credit passed by the House? Not in this Congress. We're done on taxes most likely, barring some kind of change of heart by the incoming Senate Finance Committee chair. We are looking at a large tax bill. That's what I mentioned that would be put into reconciliation. R&D would be put in there. This is separate from the credit. This would be reinstating the ability to expense your R&D activities and remove the requirement for amortization and capitalization of R&D. If there is a tax bill next year, yes, 100% yes, you will get taken care of on R&D. The question right now that is before us is, will they make it permanent for 26 or 25 moving forward for R&D expensing? Or will they allow retroactivity to 22 or maybe 24 and 25? That's the debate, because if you're getting retroactivity, it will be temporary for a period of 5, 7, or 10 years. It will not be made permanent and retroactive. And that's part of the lobbying discussion that we're having right now, and brought that up on one of our weekly Monday calls. So please, we'll take your thoughts. You've got my email on the screen. Would welcome to know if you'd benefit more from a retroactivity to maybe a 24 and 25 for R&D expensing. Obviously, you would if it goes to 22, or would you prefer to have retroactivity versus a temporary nature? So that would happen in next year's bill, and there's questions about how quickly they would move. The House would like to move by that May, April timeframe. I would hope to see something done by June, and yes, that would include an R&D, bonus depreciation, and a few other fixes there. The other question came in is on one other question that will stay on taxes. Why not retro and permanent? Why is this such a bad thing in our politicians' minds, referring to the R&D? It's not that it's bad. There is widespread support for the research and development. There's widespread bipartisan support to make it permanent. It comes down to numbers, which is how this happened the first time. When Paul Ryan was working through the Tax Cuts and Jobs Act in 17, they couldn't make the numbers work. At 1.2 trillion, it was already too big. It's now at 4.6 trillion. And therefore, if you make it permanent, it costs money. So even lowering the C corporate rate, for example, to 21% costs over $100 billion a year in lost federal revenue to the federal government. Similarly, on the R&D, in making that permanent, in the amortization, they're making $5, $7, $8 billion a year in federal revenue because you have to amortize it. And that's why it came down. So it wasn't necessarily that there's opposition. And that same conversation will play itself out in next year. If they don't make it permanent, it won't be because opposition to it. It will because they're looking to cut, which is why we would suggest opposing moving a tax reconciliation second. You're going to have less money to play with after they spend money on the border and elsewhere is there. Thank you for that question. We'll provide more context. Last question that we've got in the queue so far. Since the Corporate Transparency Act is now on hold, should LLCs that have not filed continue to hold off, assuming this may get negated entirely with the new administration? A few things to break down with there, starting with the disclaimer that I'm not an attorney and cannot give you advice. I will tell you three things here. Here's who is required to file. If you were in existence prior to 2024, then your deadline was this year, December 31 to file. That court stopped it. So if you have not filed already and you were in existence prior to 2024, most are advising you to not file and to sit and watch and see what happens. If you established a business in the calendar year of 2024, as did I, then you were required to have filed it within 90 days. And you should have filed it within 90 days as it was the law of the land at the time. Is someone going to come after you now? No, but it was the law of the land. And so I did, and others should have as well. If you are incorporated after 2025, then you had to file within 30 days. So on this standpoint, if you have not filed and you were incorporated prior to this calendar year, you are probably fine to not file, as the portal's still open because I checked the other day. But no, there's no legal requirement at this point until the court further adjudicates. The last thing to break down on that question is it cannot get negated entirely with the new administration. This was done through statute, meaning an act of Congress. Congress wrote into the defense policy bill in 2020 that Trump vetoed, that they overrode in 2021, January, this law. So it would take an act of Congress to entirely revoke the requirement under FinCEN, under beneficial ownership and the Corporate Transparency Act. But Trump could do several things, including remove funding for enforcement. He could change some of the dates for compliance, change some of the rules, but he could not outright eliminate it. A little bit more than you probably wanted, but that's the background on the CTA. Any questions? I know we're already running into the 45 mark almost. Anything else we're happy to answer? All right, I know there's a lot. Congress doesn't slow down for elections, neither do the regulators, and expect to see quite a heavy regulatory program when we get together in 1 month from now. As always, thank you for joining us. Have a Merry Christmas, Happy Holidays, and we look forward to seeing you again in about 30 days or so. Enjoy the weekend.